Hello, everybody. Welcome to the IC Topic Chats for today, Thursday, May 2nd. I think it's May. Can you believe it's May already? I know we do that I do that always, but when it was just April, it was just cold. And now it's, yesterday I went out for a walk with the dog and it was almost 80 degrees and it's crazy. We are talking about IC Topic Chats and I'm joined by Derek Price, who's going to co-present with me, and we're going to have a special guest in Kurt Stuke, who's going to help us get through a couple items that I get confused by every year. If you guys were on this session last year, it was a train wreck because people started asking me questions, and I realized I know a couple things. I don't know all the things. That's why I put a request out there to have somebody help me out this year. So Derek very graciously has volunteered his time, and we spent some time thinking about this. So we're going to go through this, and he actually, interestingly, I have a lot of opinions that he doesn't necessarily agree with, which was what made for great conversation the other day. And so I loved it because I just goes to show you that there's a lot of opinions out there and we're not all right. So anyhow, let's jump into it. So you can all see my screen here. It should have some closed captioning at the bottom. Different kinds of things we want to talk about today. Sole proprietorship, that's usually where most people start when they're just getting their business started and they don't know what they're doing. And they're just, hey, I've got a business. And then we're going to talk about partnership, different types of corporations, including a C Corp and an S Corp, an LLC. And we're going to try and differentiate between all of those. A B Corp, which is not a legal corporation, but we'll get to that. We'll talk a little bit about nonprofits and research institutes and centers and why you might want to be interested in those as well. All right, let's pop into it. So Derek, I'm just going to make sure you come in here. Why don't you introduce yourself and talk about who you are and what kind of business you are, and then we'll pop into some of these different these structures. So I kind of got ahead of myself there. Sorry about that.
No, that's great. That's great. Thanks, Matt. And hopefully between the two of us and Kurt and the rest of the folks on the call, we'll have good answers and clarity for everybody on this. I'm Derek Price. I'm the principal at DVP Praxis. I'm based in Indianapolis. This is our 20th year in the business. I have been a sole proprietor. I have been an S Corp, and I am currently a C Corp. So I have three different structures that I have participated in, and I will share my experiences in doing that and perhaps my reasons for why I did what I did. They may be reasons you agree with or disagree with, but they worked for me. And so I'll share that with you. But at the end of the day, I think if we can offer some information about these different structures for everybody on the call, you'll find a place where you fit and what works for you, because each of these can work for you at different points in time. They each have advantages and disadvantages that you'll have to determine on your own. But I'm glad to contribute, and we didn't really disagree, Matt. I just added some color commentary, as you said.
That sounds about right. Just giving you guys a heads up, I got a slow connection warning here. So if I start to pause, maybe give me some sort of a signal of some sort. We'll do what we can. All right. And Kurt, you just walked away. I was going to let you introduce yourself too. Why don't you say a little bit about yourself?
Well, I was talking with my new intern. So Matt, she's more interesting than you.
Completely understand.
Okay, so I'm Kurt Stuke. I'm in San Antonio, Texas. I started out in the evaluation. I've been in education and training all my career, and really started in the evaluation field about 12 years ago, and was the sole proprietor, disregarded entity. That whole bit grew, knew I wanted to bring on employees, and then started learning. And I went through courses for about a year before I did the LLC and the S Corporation. And we are now forming a nonprofit. And so we're starting to go through that. And that's a whole new topic for us, Matt, someday. Anyway, so I'm delighted to be here.
Yep, I formed a nonprofit. We've got the 501c3 status, but that's not a Goshen consulting thing. It's for our STEM camp nonprofit organization. That's a whole nother conversation, but we'll get to it. I know more about that than I ever expected to. And I kind of gave you guys the structures we're going to go through, but let's get into the sole prop. So a sole proprietorship basically is it's an organization that just effectively says, Okay, I also have a business, and you can have a federal employer identification number, which you often see abbreviated as FEIN, or some people will say FIN. I don't know. I guess you drop the E in that, or I don't know how you pronounce it. It's pretty easy to set up. It's basically saying I am still an individual. I'm working for myself, but you start to create some designation and some differentiation between you, yourself, and your business. But effectively, everything flows through to your personal pay, and everything is still seen the same way. So the pro is it's easy to create or terminate. It's relatively cheap, and it's directly under your control, but it doesn't separate liability. Um, and we'll talk about all this liability, but you are operating as yourself, even though you might have a business name. There's no difference between you and your business, according to the federal government, and as it turns out, to the people you're contracting with too. You may have a business name, but in many ways, you're still a sole proprietor. I say tax issues because you're being taxed as a personal, everything you get as a 1099 employee, or as whatever kind of money that you're receiving that way. You can't borrow money because you don't have a separate designation, not as a business anyway. You're borrowing money as an individual. And I wrote it all depends on you. But so basically, this is all about you. So Derek, what are your reflections on being a sole proprietor? I was only one for about a year and a half, and it was a blink of an eye in the past. I don't remember it too well.
Yeah, I agree. I mean, I agree with what you have on the slides here. I was only a sole proprietor for less than a year. I mean, very quickly, there are reasons to not be one that go beyond even what you got on the slides here. I think you want to have a separate entity, even if it's not taxed differently, just for safety, those types of things. There also is monetary reasons to do this. I think I got up to like I made $75,000 in consulting income or something like that. And immediately my financial people were saying, yeah, you should probably be something else. But those were really driven by tax reasons more than anything else. And we can get into that when we start talking about some of the other structures. But I didn't find the sole proprietorship in and of itself to be really a good model.
Yeah, what generally happens is you start getting more contracts, particularly if you go independent. And at a certain point, you get confused with all the things you're supposed to do. So you find that tax accountant finally, and the tax accountant starts to steer you away from being a sole proprietorship. Now, I am very aware that a lot of our colleagues, perhaps some of the colleagues who are here with us today, are started as sole proprietors. They continue to be, and they may have been for 15 or 20 or plus years, and it works for them. And when we get into the chat, you'll hear from them, and I'm going to definitely encourage them to talk about why they've remained what we call sole props. That's kind of the quick phrase for that. But a lot of people have remained sole proprietors over the years. Kurt, because I know you know a bunch about this, did you want to share any thoughts on your sole prop, or why people are sole props, or your experience with it?
It's just easy because all you have to do is, like file with the county you're doing business as, and you're essentially up and running. One of the things, though, that I did that is separate your personal finances from your business finances. Get a new bank account, get it, and keep them separate, because if somebody wants documentation, you don't want to have to show all of your personal stuff, and it's just cleaner to have a business credit card and a business bank account and so on.
You can get a
In fact,
business bank account. That's an important thing. You can get a federal employer identification number, and that way you're not giving your social security number out to everybody. Yeah, sorry to cut you off. I'm just excited about it.
no, I was done.
All right, so let's look at why you'd want to move from a sole prop. So taxes, hypothetically, you can pay yourself less as distributions from a company, as a corporation, and pay less on those taxes. You have liability when you're a sole prop, meaning like if somebody gets mad at you and sues your company, if you don't have any designation between you and your company, as you don't in a sole proprietorship, they can come after your personal savings, your kids' college savings, your retirement, etc. And so that was enough for me to scare me into being an S corp, which is what I am. You have credit and access to capital. I have a line of credit, and I have credit cards. Well, I have 15 staff now, so I definitely need all that stuff. But even as a one-person operation, I had a line of credit and credit cards in the company's name. And I felt like I had security, and because you're creating a lot of documentation as a corporation, you're creating a kind of an essence for continuity. You're starting to think through your business structure. All right, those were my thoughts. Did you want to add anything else about why you would move from a sole prop onto some of these other ideas, Derek or Kurt? Go ahead, Derek.
No, I think those are the key things. The liability is important. I think you just want to separate those things for legal reasons more than anything. And the easiest thing to do here, and I think that's going to be the next thing, is the LLC, and we'll talk about that because that doesn't necessarily put you into a corporate structure per se for tax reasons. But it does create that legal liability between you doing work as an entity that's not you. And that's important from an LLC, from my perspective, to be an LLC, even though you can have an EIN, a federal EIN as a sole prop. If you're going to do that, you might as well be an LLC. That's really where you're getting some protection. It doesn't change your taxes really at all.
All right. Any other thoughts, Kurt?
No, you've covered for now.
So the next area is partnership. And I haven't found a situation, I'm just going to say before I get into the pros and the cons here, I haven't found a situation where the partnership makes a lot of sense. Melissa, we're going to get to questions afterwards. So I don't want to get too far into questions. So just going to give you a heads up on that. But we'll definitely get to you there. I haven't found a situation where the partnerships really make sense. So people oftentimes will say, I want to do this with my best friend who's also doing the same kind of work here. And they create a partnership. It's based on relationships. You're sharing your profits. They're relatively easy to create, so I'm told, not that I've done it. You have resources available, more resources than you would have at a sole proprietorship level, but and there's limited red tape, but you have unlimited liability to both you and your firm. So I understand you would put together a partnership agreement, and this is like a marriage. If you decide to get divorced, it's messy. And it's and here's the thing that I've heard. You're going to set up a profit sharing situation where you're 50-50 or 60-40 or something like that. And then you're going to go out and you're going to do this business. But the reality is your work split will probably not be 60-40 or 50-50. It'll end up being something different, but that's the way the profits need to go. And so I suppose you can change things around and it could get kind of sticky, but what I would suggest to people who want to work together and just love one another so much, set up 2 LLCs. We're going to talk about LLCs next. And work together and say, oh, hey, we got this new project. It's worth $50,000 a year. You take 20, I'll take 30 because I'm going to do more work. And then when you come to an agreement on each project, and then if all that's beautiful, after a couple of years, then talk about putting together a business where you issue each other stock and then you determine your percentages then, and then you can buy, it's easier to flex around. But my experience, my conversation with lawyers is partnerships are more trouble than they're worth. That's my opinion. Derek, what do you think?
Well, to me, I just think of sole proprietorships, you, and a partnership is more than you. And so it's really, are you one or are you more than one? And it doesn't change anything from a tax standpoint by itself. You would have an LLC, probably if you're going to do this, you would make an LLC in that case, and all the issues you raise, which are challenges. You can probably tell my opinion here. I mean, an LLC is fine if you want to have one. But I think you should at least be that, no matter what you're doing, whether it's just you or you and somebody else. And I think there are some tax benefits for being a corporation federally which may vary by state, based on what state you're in. And so I would probably encourage people to move in that direction, whether they were a partnership or not, to go towards the corp status, or at least an LLC as a bare minimum.
Sounds good. Did you want to share anything, Kurt? As long as we keep bringing you in here.
Nope. Nope, we're good.
This is where we get into the LLCs, and then we get into the differences between LLCs and S corps, where I get confused. But actually, Kurt, why don't you give your own perspective on what an LLC is? Limited liability corporation.
A little bit more paperwork. It's filed by you file it with the state. And so each state, you really have to pay attention to what each state is requiring in the formation and all. But the idea is, and there's LLCs where you're a single member and LLCs where you're a multiple member. And members essentially are owners. So I'm a single member owner. I own the company 100%. But the idea of forming an LLC is the liability. If you grow and have an employees and things go sour with the employee or the consultant, I mean, it might be a client goes sour on you and wants to come for you, but I doubt it would be a client. It would most likely be a consultant or former employee. But you want to protect your house and yourself, and that's where the LLC comes in. And gives you a little more management structure, but.
So an LLC does not require a board of directors, which we're going to see that in the other corporation structures, right? And I know Derek has an opinion about the board of directors. I have some considerations for that too. But when you're first setting up an LLC, can you hire staff? That's my question for you, Kurt. Did you hear me?
I think so. I mean, it's again, if you got to have your personal finances separate from your business finances, the business finances, you could do it. But I'm not sure about the taxing. I formed the S corporation before I hired employees, just for the whole tax documentation issue. I don't have any experience in that. Derek, do you? Did you hire employees?
Yeah, not as I have employees, but not as an LLC. I was an S corp at the first time I had employees, and I've been a C corp. I don't know if you can have employees as an LLC, but I can tell you that when you have employees, if anybody has them, you have lots of taxes that aren't about income taxes. They're about taxes that the corporation pays, for unemployment insurance and workers' compensation and other types of things, which have both federal and state components to them. I assume an LLC could pay those things if it had employees, but my sense is I just don't know if you could have employees here or not.
So I can't speak to specifics on LLCs with this regard, but I can say the advice was, if you want to have employees, including myself as an employee, go to the S corp. And so I jumped over the LLC idea and went straight to the S corp when I was a sole proprietorship back in like 2008, 2009, 2010. I formed an S corp and went straight to that level. And then that's when I kind of started the business really in earnest in 2011. And I started paying myself as an employee. And then I would also kept the salary as low as I could. And I would take profits, and and whatever profits I had, that was taxed at a different rate, which is why people do these sorts of things. When you're an LLC, you're only taking profits directly to your individual, and you're not really setting yourself up as an employee and paying taxes as an employee. You're paying taxes on income you receive as an individual, not so much as an employee wages. That's my understanding of it. So we'll get into the chat. People can share their thoughts on LLCs then. Now let's go into the S corp. This seems like this is where a lot of us end up. Derek went the extra step and he went to a C corp, and he's going to talk about that in a little bit. The S corp is preferred for small companies with payroll. That's my understanding. That's what I read when I did some of the research. I've got some links in here. There's more admin than an LLC because you have a board. You have less management flexibility. again, because of the board of directors. Now, board of directors for me is the two partners, which is, well, my partner in life and business, and myself. And so we form the board. We have positions and we meet actually quite frequently right now because there's a lot of considerations for our business. Now, you don't need to meet frequently. You really need to just meet once a year. And that's you have bylaws and you have these sorts of things that you set up. You file these things with the state, and you're recognized as an S corp through the state, through your state. You're going to have corporate replacement taxes and other things that your Secretary of State or your however your state is set up will share this information with you. Be happy to collect those things from you, and when you forget to do it, they'll be happy to remind you. When you have employees, that's a whole nother conversation, but you'll set up a lot of different things with regards to taxes with states. And if you have employees in other states, you'll figure that out. In fact, I just paid Derek, I just paid about $500 to the state of Indiana today because I have an employee in Indiana. So that's tax money for you and your family to enjoy. You're welcome. Anyway, so S corps, did you want to share some of your thoughts on that, Derek?
Yeah, I'd add a couple of things here. The one is I do think there's a tax benefit here that's not insubstantial. And once you become an S corp, in essence, and you've already talked about it, you mentioned it, Matt. In essence, what you'll do if you're a sole proprietor S corp, you would probably pay yourself a salary of some amount, and that income is going to be taxed just like you would have been taxed as an individual sole proprietor or as an LLC. But you also can hold back money from your corporation and pay yourself as a distribution, so not as wages. And the benefit tax for that is that you have now bypassed the Social Security double tax of 15% because you only pay that on wages. And so if you have income as an S corp that are distributed to you as a distribution and not wages, you still pay income tax on it at the same rate as your personal income tax, but you do not pay either side of the Social Security tax and Medicare tax, which is 15%. Now, this is a gray area. It's illegal, totally legal. That's in fact why most people go to an S corp. But you should not, in my opinion, not legal advice, you should never just pay yourself a distribution as an S corp and not pay wages, because that will definitely be a red flag to the IRS that you are trying to avoid the payroll taxes of 15%. So you got to pay yourself something, but you don't have to pay yourself a lot. You can keep a balance. There are different rules of thumb. The one I worked on was 40% wages, 60% distributions, and I tried to target that as a minimum. Once you earn more money, it sort of becomes moot because you're going to hit the Social Security cap anyways if you make a lot of money. And so eventually this goes away. But under what is the cap on Social Security this year? I think 168,000 in wage income. So if you make less than 168,000 and you were an S corp and you paid yourself 40,000 in wages and 60,000 in distributions, that's $60,000 in distributions saved you 15% or $9,000 in taxes through the payroll, which is Medicare and Social Security. That is a pro on an S corp. The other thing I would add on the board of directors is, yeah, you need a board of directors, and the board of directors needs to meet, and you need to have corporate minutes. But I have always been and continue to be the only director of my board. So I am the owner and I am the director. I'm an employee. And I have both of those roles, and that is legal, at least in Indiana. I think it's legal everywhere. But you need a board of directors, but it could just be you. It doesn't have to be other people. I think there's a contrast with that for a not-for-profit board, which does have to be other people, and I think you have to have at least 3. But we can talk about that a little bit later. So to me, an S corp was the no-brainer because it really didn't change how I operated. I just had to be very clear about the corporation and me as an employee, and understand that I played 2 different roles legally and by definition, and went that way. So I think the tax here is a big pro after, maybe 50,000 the threshold, maybe it's 75,000, but I think that's a big benefit here for people that are going to make 100 and 150 grand a year. for tax purposes. And I don't think there's a little bit of extra burden. You file an S Corp tax, that's going to cost you money. You just don't pay any taxes as a corporation. That all passes through to your personal income. That's a burden. That's an administrative cost. It may or may not be worth it to you. I found it to be quite worth it to me.
Now, thank you for that, Derek. Kurt, I see that Sherilyn's put in that question that comes up every year, and I never know how to answer it about the LLCs and the S corps and the relationship between the two. And you can be an LLC pass through to the personal, or you could be an LLC taxed as an S corp. And this is where I go, I don't understand it. Why don't you
Okay.
share your story? And I think it might
There's
help us
there's
answer Sherilyn's comment.
Okay, there's two topics here. One is the tax, one is the business structure. Whether you're a sole proprietor, a single member LLC, a partnership, a multiple member LLC, and a nonprofit and C corporation. So there's all that is one. You file those with your state. The other is the tax structure. The IRS gives you this wonderful designation as a disregarded entity if you file your taxes on your 1044 and that's all you do. So if you don't have an S corporation or a C corp, you are filing all of your income and losses and everything on your 1044. You are a disregarded entity. So the S corporation, like Derek says, it provides a tax shelter kind of thing. It helps you control the taxes while you go along. You can actually mix and match things. So you can be an LLC and taxed as a disregarded entity. It's not common, but you can do that. So sole proprietors tend to be disregarded entity for the tax purposes, but you can get an LLC, get an S corporation. That's a very common pattern because it means you're growing, you want the liability protection, and the S corporation is the taxing. If you're a sole proprietor now, I would say go for an LLC and still be taxed as a disregarded entity if it makes sense. The LLC is just protection, and it really doesn't save you any taxes, but the S corporation will, once you hit some threshold, and that threshold varies, depends on your other income. So I've seen anywhere from, if you're making $75,000 or more a year in revenue generated, you should go for an S corporation. And I've seen it as high as 120,000. So somewhere in that range is when they say, for taxing purposes, like Derek has said, it's better to go that with the S corporation.
I agree with Kurt on that 100%. And just would add one last thing based on the chat. I answered in the chat, but you do not have to be an LLC before you become an S corp. I skipped that altogether. You can just be an S corp. It still gives you some liability protection because now the S corp is the entity that you want. An LLC creates that protection, but prior to being an S corp, and you can be an S corp and an LLC, but you don't have to be an LLC to be an S corp. That might just be your flow and how you do things. People might have different opinions on that, but I skipped that LLC step altogether. Just went right to S corp.
Two quick asides. Number one, we're recording this, so you can go back and watch this, or you can rewind what you just heard to hear it all over again. So because this is confusing. And the second one is we didn't start with a disclaimer that none of us are lawyers and none of us are tax accountants. And so we're interpreting this the best way we can based upon our years of experience. So I fully recognize that everything we say today could be completely wrong. So these are just our opinions based upon our experiences, and some of them, some significant experiences. But I absolutely suggest that once you've got a little bit of information, you're armed with that information, go talk to somebody who is supposed to know what they're doing, a small business accountant or lawyer in your community, and share what you've learned, and then ask their opinion, and they'll set you straight. But hopefully we've given you a little bit of information. But I do think what Kurt said makes a lot of sense. When you get to about $75,000 in revenue, you will start to realize that you're paying taxes on all of that. And what am I paying? And honestly, 90 to almost 100% of my revenue comes from tax money. So I love the fact that people pay tax money so that we have that. But I don't necessarily want to encourage you guys to pay more than you have to. If honestly, some of it should be seen as different than income, employee income, that is. So anyway, you should be smart with your finances. All right, that's the S corp, and we will get to the point in the chat where everybody will set us straight and say what they really think about LLCs and S corps, and that usually happens every year. So that's what I expect, and I won't take it personally like I used to before, but because it wasn't personal, it was just people sharing their opinions. This is the most important. This is the most fascinating part of it all to me, because I always went, "Who the heck would want to be a C corp? This makes no sense for any of us. What are you thinking?" And then Derek goes, "Well, I'm a C corp." And so anyway, let me tell you what. Actually, Derek, why don't you give the C corp piece? You've seen
Sure.
what I put up here on the slide, and
Sure.
but I always said this makes no sense for us, so nobody should
Yeah.
ever do it. Go ahead, Derek.
Yeah. So I'm glad Kurt laid out the two different things. Like there's a corporate structure question and then there's this taxation question, and they are related, but they're different things to talk about. I entered this conversation purely from the taxation standpoint. And so back in 2018, the corporate tax rate went from 35% to 21%, 14 percentage point lower. When as an S corp, or if you were an LLC disregarded entity, you are paying a tax rate that, if you're at the highest tax level, was greater than 35, but it might have only been 39 and then 37. So pretty comparable to be passed through all your income as an S corp, whether you put it in your bank account or not. You were paying the high rate at the highest levels if you were a high income earner. And there was no value at the C corp level. The C corp tax dropped to 21%. And for me, because I didn't take a bunch of money out of my S corporation every year, I kept it in there because I'm trying to run a business. I had employees I had 5 employees at the time. I needed revenue in there for cash flow purposes. But as an S corp, all of that was taxed because I was a cash business. And so there was an accrual thing that maybe we won't get into, but all of that was taxed. And so I might have $100,000 in the bank for cash flow, but I paid 37% tax on that. So I really only had $63,000. Well, that didn't make sense to me when the tax rate corporate rise dropped to 21. I decided, well, maybe I need to keep that money in the bank and pay only 21% on it as a C corp so that I can run cash flow. So I'm paying less taxes. That was the benefit for me. There's a negative on that, however, also, which is that now when I want to pay myself a dividend, I have to pay an additional 15 to 19% tax based on my bracket. And so you get a double taxation. So I had to decide whether that ultimately was that higher tax that I would ultimately pay when I pulled money out was worth it to me. And I decided it was. And so I went ahead and made that change. Now, at the time, we were, $1.2 million organization. I had 5 staff. There was a lot of revenue coming in, and I just thought that was a better move in 2018 to make that change. But there is a double taxation issue on the negative side. Yes, you have a board of directors here, but again, I'm the director. You don't have to have multiple directors. It can still be you. So you need it. You got to keep those rules and stuff and everything, but that's no different from an S corp. It doesn't add that at all in that regard. There are no different rules here about keeping your minutes and stuff. They have to do that for an S corp too. You have a board meeting, you write down here are the meetings, you sign it, you date it, it's in the file, you're good. Nobody has to give that to anybody. You just need it in case you were asked for it for some reason. Hopefully you'd never be asked, because that means you were probably in trouble. So those are cons, but they're not cons relative to an S corp. They're just cons relative to an LLC or a sole proprietorship or a partnership. You can have multiple owners. There are shares in my C corp, but you know what? There were shares in my S corp too. So I could have multiple owners if I wanted to have people buy. I owned all the shares, kind of deal. But in essence, there are shares that you have listed, and they are shares that are common or preferred. There are all sorts of various rules about this, whether they're all distributed or not. They're all that kind of stuff. But that is an easy thing that the tax accountant people take care of. The legal people take care of that. So I didn't find that to be a burden. But yes, I could sell shares in my company if people that wanted to buy it agreed upon the price. And I could also sell my C Corp company, all of its shares, and sell my company that way. If I wanted to sell my company to somebody and they would buy all my shares, that would be a good thing because then it would only cost me the capital gain tax on the value. So that's good as well. Yes, my corporate assets are separate from personal. That's no different than an S Corp. They're all separate. So that really isn't a different from an S Corp. It's different from an LLC, potentially. But personally, I don't think you should ever keep business money in a personal account. So I don't think you should be a sole proprietor because I just think there's too much risk there. But again, that's just an opinion on that. So separate money is a good thing. And yeah, if a corporation, you've got to have that. So that's my summary on a C Corp. I will also say in full transparency, there's a pretty good chance that I'm going to convert back to an S Corp. I'm not sure at the end of the day whether making this change was a good one for me. It seemed right at the time. The double taxation is a pain because that really throws you up to a super high total tax of any money you pay yourself between income and dividend tax. So that is a con to be strongly considered. And if, as I was, an S Corp and I converted to a C Corp, I'm stuck for 5 years. So I can't convert back until for 5 years. Now I've hit that threshold in 2023. And so if I wanted to go back to an S Corp, I can, and that's great. However, all of the money in my C Corp that is retained earnings as of that transition still come out as double taxed because they were earned while I was a C Corp. So those are some things to consider for a C Corp, not advocating for this structure, but at the time, 5 years ago, it seemed like the right thing to me to maintain more of my cash after tax in my corporation so that I could run better cash flow that way for the last 5 years. And that did work for me. But from a personal standpoint, I'm paying even higher taxes than I would have otherwise when I take it out. I think I'll stop there, Matt.
Yep. Double taxation. That's why people stay away from it. My experience is people who have C Corps, which is kind of like the old like the real deal corporations. S Corps were created for effectively groups like us. Are people who hold property and large amounts of like trucks and kinds of equipment and things like that. And it helps with just the accounting on that piece of it all. I know a lot of people who are, they say C Corps are good for people who are going to buy and sell houses because you effectively keep all of this in the business and you can buy and sell these houses. But I don't know enough about property to talk about that. But anyway, that's my experience with it. I was like totally intrigued when we had that conversation last week about the fact that you're a C Corp and you sharing your pros, the 21%. So we're going to get into some of that. I see our time is starting to slip away from us. I want to make sure we talk about the other things on here. In many ways, full stop. We're not going to be talking about more IRS kind of designations. We're going to talk about different ways you could go. Actually, we are. We're going to talk about a nonprofit, but we'll get to that in just a second. B Corp. B Corp is not an IRS recognized corporate structure. It is a effectively like getting accreditation like for a university. You're getting reviewed by an individual organization that gives you the recognition as a B Corp. You're not getting a tax break. There are more in the way of administrative costs. You may want to do this, and a lot of people do. And we know a lot of our peers do this because they believe it represents who they are. It might give them an edge with other kinds of potential clients. It gives perceived value, and it kind of orients your organization around an idea of being just a better public benefit type of corporation. But you're still either an S Corp or an LLC. Your IRS designation is separate from your B corporation kind of labeling. It's effectively a label that you get to put on your business. Derek, you looked at this, right?
I did. My whole, basically almost all of my clients are non-for-profits, private philanthropy, government agencies, things like that. But in particular, so I'm working in the social sector, and I made a for-profit company not because I was, you know, a cold-hearted capitalist or something like that. It actually was easier than making a not-for-profit, in my opinion, a hell of a lot easier. And way less paperwork, again, my opinion. But I looked at the B Corp because this is sort of like the do-gooder thing, the do-gooder seal of approval. Like, I care about my community. It's a value statement. It's a mission-driven kind of statement that would be helpful for corporations. So I did look into this. There are a couple of organizations that will certify you as a B Corp, and they're very, I think they're standard rules about what this means, or at least these organizations are creating standard rules. And so to me, it was more of like, okay, now I have to get this sort of independent board, which has nothing to do with my corporation for tax purposes or operational purposes, but they're in essence are going to determine A, if I can even be a B Corp and meet the certain standards. And then B, every year, I think, or it might be every other year, you have to then fill out paperwork for them to recertify you each time. I didn't find it to be a good return on investment for me at the time. There didn't seem to be, people weren't asking me, are you a B Corp? When I would tell them I was a corporation, a for-profit corporation instead of a not-for-profit. Nobody asked me if I was a B Corp. It didn't seem to be an issue. So for me, I just determined it wasn't worth the extra administrative cost and financial cost to get certified as a B Corp. But I like the idea a lot, and you know, might reconsider it in the future.
I can say that we think a lot about internally about equity and just as our organization and the way we're working within our staff and the way that we try and operate with our clients should be reflected by the way that we think about ourselves and our values. So we would align a lot with the way the B Corporation kind of status sets up, but we haven't gotten to the point where we think that we'd like to go to that level. It's conversation for the future, but it does feel like the cons to me have kept me from getting there. Plus, I'm still trying to figure out, I mean, we grew from one person in 2019 to 15 and 20, whatever year it is now, 2024. And I feel like I've been playing catch up for 5 years. So we haven't gotten there yet. All right, next one. Nonprofits. Some people may want to set up as a nonprofit. You'll see that this is kind of the reason why you might go after a B Corp. You believe there's a social mission. You're not focused on profit because you can't retain profit at individual level. It would have to be, you can only receive a salary. It is a separate legal status, so you'd be set up as a 501c3. You do have that limited liability piece. And oftentimes it is easier to work with foundations, and you may have access to grants and other kinds of contracts that you wouldn't have access to as a company. But there is a lot more paperwork. You will likely have audit. You have to do a lot of the paperwork is paperwork that you will need to file for public review. The surplus funds don't go to you personally. They go to your organization goals. And you do have to have a board of directors who are external to, you can't just be a one-person board of directors, as Derek was talking about. You will need to have people who are external to yourself, who are on your board of directors, who will provide direction. I was talking about our 200th episode, and Melanie Hwalek, Hwalek. If you've been around for any amount of time, you've seen posts from her. She's been around for about 30 years. She took her business from a for-profit to a nonprofit, and she's going to talk with us in September about why, a lot of things, just about her 30 plus years involved with being an independent consultant. But that's going to be my first question. Like, what was it about the nonprofit that drew you in and made you want to go from a for-profit to a nonprofit? Because for me, I feel like I need to make decisions on at a split second a lot of times, and I don't have the time to go to a board to make that decision. And we are setting up a nonprofit for a piece of our work that is a true nonprofit, and it does have its own board. But if I want to go hire a person, or if I need to set a salary level, sometimes I want to do that, and I'll check with my own board, which is 2 of us, and we're married, so that makes it a lot easier to have a conversation. And so I think the nonprofit becomes a lot more of a pain in the butt. But that's just me personally for trying to run our organization. Do you guys have any thoughts about that? Derek or Kurt? Any thoughts about the nonprofit idea?
No, I think you've hit all the key points. I would be curious in the future to understand the move from for-profit to nonprofit. That'll be very interesting from an asset transfer standpoint. Only because I only know about that kind of stuff at the like super high level, like when a for-profit entity buys a nonprofit entity at a really high level, for hundreds of millions of dollars. Like there are rules about where the money stays and goes from that transaction, and there are rules about the board or the executives of the company being purchased if they were a not-for-profit of something called inurement, which means the non-for-profit executives can't like enrich themselves based on that purchase. And so that I think you've spoken to that here. The bottom line is beyond your salary and maybe a bonus, you can't see any of the excess revenue as a quote owner or executive director of a nonprofit. It always stays with the company.
And you probably realize that ahead of time because you believe in this bigger social mission, and that social mission should be driving the organization first and foremost. Where I think it does drive a lot of our for-profit businesses, because that's who we are, and it's kind of the world that we operate in. But that is the purpose for your organization at that point when you're a nonprofit. I am very aware of the fact that we are talking a lot today, so I'm going to make sure we get to the last slide here, the Research Institute and Center. I put this on here because, well, to be completely honest, when I was first starting out, I was working for a university and I pitched the idea of creating a research institute. And what I have today would have been a research institute if, well, that organization decided to get their act together, and they didn't. And I got to the point where I was like, I want to give you I just have figured out how to generate over $100,000 a year when I was getting it started. And you guys aren't responding to me. So what's your deal? And then I thought, why am I doing this? I'll just go out and figure out how to start up an S Corp. I don't know what that is. At the time, I had no idea what I was doing. And I said, but I think I'll save the money and keep it for myself. And I won't have to deal with this organizational administrative nightmare, which was the university I worked for. So as you see, a lot of our research institutes, they get that instant prestige and that organizational support because they're affiliated with something with a beautiful logo that's been around for 125 years or something like that. And then you can put your name out there and you put that logo on your card and everybody goes, oh, you're with, name it, a fantastic institution. And I think it does drive people to your door. You will get a salary and you will have administrative overhead. You'll have a dean or a vice president for research or something like that who's going to tell you everything you need to do. You'll be going to more meetings. You'll learn a lot about facilities and administrative costs, more than you ever thought you'd ever expect to know. And honestly, you'll probably find yourself a lot of funds coming into your organization and then going straight up the line to feed the machine that is your university. And there's a lot of red tape with that. So if you're in this place, you probably already know what these things are. And I probably wouldn't recommend going this way unless you're already there. But I think there's a lot more flexibility in the world that we live in. So any other thoughts on the Research Institute idea? I know more about this than I ever cared to know about it, but because I used to help. I've worked for a couple of these.
Nothing from me.
All righty. Well, you know what? I don't know what the next slide is. Yeah, that's from last year's slides. So we're not even going to go there. So I'm going to stop share right now. And we're going to go into the question and answer thing. So everybody out there on YouTube land, thanks for being patient with this extra long session.